Hello everyone, it is Evan from the Trade Risk on Sunday, August 2nd here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, and then finally some individual names and trade ideas for the week coming up. Now, happy August to everybody. It is the start of a new month, and I think it's worth spending just a moment here looking at the monthly chart of the S&P 500. Something I don't do that often, but because we are kicking off a new month, I think it's worth looking at this. And I've removed all my lines from the chart here. You can see we've been, of course, in this monster uptrend all the way from, the bottom in 2008. So starting in 2009, we had a few, corrections in 2010 and 12. But since then, it's been relatively smooth sailing. You can see where we are right now. The fast moving average, the light blue line here, the 8-period exponential moving average, and the 20-period exponential moving average, the yellow line on my chart, still very bullish alignment with the EMA, still racing higher above the 20. Now you can see here, we're still just riding along this 8 EMA. We've yet to really test this 20 at all. We had a brief, quick pullback in October, but that's about it. So when you look at this chart, I think what some people aren't considering or thinking is a realistic possibility is that we could be going sideways here for much longer than we currently have been. You can see how the overlap and the sideways candles is starting to set in here for most of 2015. Lots of people are frustrated. We're going to break out. We're going to break down. I mean, if you look at this chart, there's nothing that says we couldn't go sideways here for another 10, 12, 14 months. I mean, it sounds extreme, but between 212 and 199 or so, I mean, just a nice healthy sideways consolidation, and then an eventual breakout. Not to say this has to happen, but I'm just saying that if you look at these longer term time frames, and you think of it like any other chart, like a 5-minute chart or 30-minute chart, daily chart, when you have such a long run like this, you expect consolidation, you expect a pullback. So that's just keeping the larger time frame in context. Of course, we don't have to do that. We can just continue higher. We can pull back and break down. But something to think about here, if you're frustrated with 5 or 6 months of sideways, just realize it could happen for another 5, 6, or a year of trading. So let's look at some of the more actionable time frames now that the monthly is out of the picture. If we look at the daily chart here, you can see we had a nice week. The bulls reclaimed most of last week's damage. Let's look at a weekly chart first. You can see, last week we had this potent down move here from this 212.50 resistance level. We closed on the lows. This week we reversed most of that, the majority of it, 50-60% of last week's move, and we're just smack right into the middle of this range again. Fast moving averages are below us, so short term the momentum is higher, but of course we are still trapped in this sideways range. So again, we need to just play cautious here. It's going to be a lot of whipsaw. There's individual opportunity, but the markets here are telling us, just to kind of sit on our hands, and less is usually more in this type of environment. So that's what I'm doing. That's what we're doing here. We have longs on. We're going with the short-term momentum, but nothing that's all in or heavy on one side or the other. So I think that's where we stand here. Let's look at some other indices. The IWM, of course, now this is in the laggard of the past 6 weeks or so. It had a nice session on Friday, closed up 55 basis points, where the SPY ended up closing red on the day. So that is an improvement, but you can see the fast moving averages are still heading down. Price is kind of testing them right now. It's in the lower half of its intermediate range that it's been in for most of this year. So we need to, be a little suspect of this, but still, as long as, we're above 120 or so, if you look at a weekly chart, you can see where we are. The fast moving average is now starting to curl a little bit here on the weekly chart. So something to just keep in mind here, with the Russell, with the small cap. I don't think there's too much to take from this just now, but it's something to be aware of. And then the Qs, you have the exact opposite, where these are the leaders here. We are above the previous range that we've been in for most of this year. We've broken out above it. Fast moving averages are below us, so the momentum's to the upside. So this is real constructive action here. in the Qs. So you have, you get the outperforming Qs, you get the underperforming small caps, and then you kind of in the middle with the S&P 500. So you got a little for everybody here. And again, there's definitely opportunity in the individual names, and less so in the choppy indices, if you will. Now let's look at some other markets. TLT, we'll start with there, and of course this has been in a nice little uptrend since the beginning mid of July. We held these 115 lows, we broke out above 119.20. We're heading higher, so this one is looking constructive here. Let's see if it can continue. Again, you'd want to be looking for some long opportunities in this right now. Look at the weekly chart. You can see it is sort of damaged now after most of 15 as we've been heading lower, but still I think the short-term momentum is to the upside. Let's see how far the bulls can take us there. USO, this one had a horrible session on Friday. We closed on the lows. We took out the lows here from March, and new closing lows for several years for sure, since yeah, I mean, we took out the 2008 lows. So looks pretty damaged, just as it did coming into this year, as we had this fall off here in 2014. USO again looks in trouble. Probably, there'll be a bottom somewhere, but where that is and how long that'll take, no one knows. For now, short-term momentum is down. I'd be looking for short plays in oil. Wouldn't want to be catching the bottom here until we see some stabilization. At least let's see these moving averages, the short ones, start to go sideways and not just race lower, because I think that's dangerous. UNG is in a similar camp, not quite as bad. Again, this one hasn't taken out the lows for the year. It's still pretty much in the middle of this messy range that it's been in. You can see almost have a series of higher lows here since May. So I think as it comes down to this upper 12 levels, $12.50 to $13, that'll be the real test to see if the natural gas bulls can stop this from breaking down and basically following the steps of USO. So that one's interesting. We'll have to see what we get from that one. Gold, this one's still a mess, still really weak. This one already broke down. Silver, same thing, broke down from its support this year and last year's support. So both are in trouble, both heading lower. Both favor the shorts there, as opposed to trying to pick a bottom. Now let's get into some individual, or some leading sectors actually. The staples, been talking about these continue to perform. They were up on Friday. If you look at a weekly chart here, you see we engulfed last week's bar very nicely, closing on the highs. Definitely some rotation here on the staples. Look to them, that sector, for some long opportunities. Also is now the discretionary sector, which is also at new highs here. Closed Friday up 0.3 basis points. Also engulfed last week's, just about engulfed last week's full candle bar. So this one looking very constructive here as well, the consumer discretionaries. And then the rate sensitive sectors, the IYR and the XLU, you can see they are trying to take out resistance, which they haven't done in quite some time. So let's look for some continuation, some continued rotation into these names. This would be the XLU and the real estate sector. If we do see, and again, this is kind of following cues off TLT. As this continues higher, you're going to see these sectors continue to catch a bid. So there's a good correlation there. Keep those on watch, but those are the leading sectors that we should be spending some time on. Let's get into some individual names here. Apple, this one is breaking below our support level, our critical support level we identified here from its immediate post-earnings days. So 122 support here. This was the lows from earnings. We broke below it on Friday. We closed below it. Take a look at a weekly chart. You can see this very clean sort of rounded top that Apple's been in now since basically February of this year. So for now, I think the bears are in control here, especially as the fast-moving averages head lower. I think especially if we can't quickly reclaim 122 in these recent levels here, I think Apple is going to be an easier short over the at least the short term. Google, This one is flagging out here, potentially bear flagging. You can see we had this strong 2-day, move down from its earnings gap, and then we've gone sideways here, kind of struggling to hold on to this fast moving average and hold on to the gap level. So this one will be interesting heading into tomorrow, into this week. I think this is a pretty actionable short setup right here below 653. You're going to see potentially a nice swift move lower again into this open gap. So I like the setup here in Google on the short side. Let's see if that one plays out for us in this coming week. Netflix is complete opposite here. Still a very strong bid in this name. Every time it looks like potentially we're going to get that rollover, potentially we're going to get that correction, the bulls buyers step in. They buy this market. This is just hallmark signs of an uptrend that just doesn't want to give up, and every time it looks the worst, it magically finds a bid and it continues higher. So Netflix, again, just so much strength here, and it's heading back now to the top end of tough to call this a range just yet, but it's basically the highs from its earnings day. Let's see how it reacts up at 116. If we get there, might slow price down at the top end here, where we found resistance immediately following earnings. So keep that one on watch. Facebook, this one had earnings this week, digested it pretty nicely. Ended up closing on the week down 3%, but still in a very strong and healthy uptrend here. This one just looks like it needs a little more time to set something more cleanly up, but again, fast moving averages are supporting us right now below. Let's see how we handle this week. I think it'll be a good digestion week and give us some clues as to the direction. Twitter also had earnings, and we talked about this on Wednesday. This one's in trouble still, continues to break support, doesn't seem to want to find a bid here. Closed the week on the lows down here at $31. If we look at a weekly chart, you can see the ultimate lows for this stock were back in May of 2014, right around $29.50 or so. Got to imagine that, we're going to want to at least try and retest that level. I think that will be, perhaps the next stop for this name. Who knows? It certainly just needs more time right now to figure out what it wants to do. So Twitter is just an avoid for me down here. Amazon, this one's holding up pretty well so far. It's holding its gap up. Had a nice session on Thursday, held in there on Friday. Let's see if this one can continue to hold the lows down here at 525. I think you potentially have, if you want a real tight stop, you get a level to shoot against, but just needs a little bit more time. Excuse me, for my liking, but Amazon, of course, still looking really healthy. And finally, our last name before we look at trade setups is Gopro. This one we've talked about has been holding up as well, above all the fast-moving averages. Want to see it hold above $60 for another week or so. If it could go sideways here, give us a nice trade on the upside. I'd be looking for this one. I'd be interested. I think momentum now has returned to the upside here, and I want to be looking for some long setups in Gopro. Now, let's look at some other long setups heading into this week. First is Kite, K-I-T-E. This is a name we've talked about before. It's been in an uptrend for a while. It's cleared all of this bulk of the supply back here from February, or from March for sure, and now it's contending with this $74, $73 level. So tried to get going on Friday, got faded a little bit. If it can get basically recover most of Friday's highs or so, get back above $74, that one could be interesting. I'd love to see it go sideways even more though, but I'm watching Kite right there for a new entry. Fit is another one. Recent IPO, had a really nice closing session on Friday, up 5.25%, 5.3% on Friday. It's a new closing high for the, not quite, almost a new all-time high for Fit. But again, it did take out all of this previous resistance. I'd like a little more continuation above $48 or so. This one looks great, so look for some continuation higher next week on Fit. I think this one's pretty actionable. It's a recent IPO, so again, this one can move pretty quickly. We had a nice winning trade in this earlier this year, so let's see if we can get another one for us coming up. Another setup we're looking at is Blue, B-L-U-E. That's a biotech name. Might not be ready just yet. I wouldn't hate to see some more sideways consolidation here, but you can see the buyers stepped in here right around 155. All these tails down here of support this past week. So let's see if it can take out some resistance going into next week. 170.50 or so is the level I'm watching. I think blue looks pretty interesting. Another name is ESNT. This one maybe not quite ready yet either, but I'm watching it. It's above all the fast moving averages. It's going sideways. Like to see it make a push through 29.60 or so. Would get me interested in this name. ENDP. This one here, this is a drug manufacturer industry, above 87.75 or so, $88. I like this. It held its support back here in late March. It found resistance in May. It's finding resistance here now, so it looks like a pretty actionable or a pretty interesting inflection area. I like this name if we can see some more continuation into next week. And then finally, for one short setup I have for next week is BOX, BOX. This one, again, real weak. It's been going sideways, and this long consolidation now since its IPO is below all of this supply down here. So let's see if it cleanly breaks below 16.25 or so. I think it's a pretty actionable short. Not exactly my cup of tea to short recent IPOs, but certainly can lead to some accelerated gains if this starts to really roll over. So I think this looks like an attractive short setup heading into next week. So that is all I have for today. Remind you, if you guys like the videos, please do subscribe. I also do a newsletter that goes out every Sunday. It'll be going out later today, thetraderisk.com/join. Free, just drop your email list. I will send you some additional trade ideas, thoughts on the market, and all of that good stuff. So thanks for watching. I will catch you next time.